Hey, what's up, everybody? Christopher here. I am the head systems trader here at MacroOps. And well, this week, everything was kind of going fine until, the last few minutes of Friday. Um, there was a post by POTUS, President of the United States, that came out and kind of shook the market. Now, um, I'm not going to weigh in on my opinion of the tweet, post, whatever it was, the content of it, or my opinion of what I think could possibly happen from here regarding the geopolitics of it. I don't believe I have anything to offer in that perspective. But I am going to focus on my usual, the systematic approach to markets, how I'm positioned, um, a bit of a if this then that sort of scenario. If if things get where I would be worried about stuff, where I'm constructive, and just kind of my usual thing. I don't really have anything to add. I don't sit in DC. I'm not involved in any of this stuff, and if I am ever involved in anything in any way where I have some, firsthand insights, then, I will weigh in on that sort of stuff. I do find myself involved in some things from time to time. Um, but based on my security background and whatnot, I do find myself sometimes in those places. But at this time of, the everything I have nothing. So what does it matter? What my opinion is. So let me go ahead and get right into the our usual sum and what we do week in and week out. So this is the S&P 500, a weekly chart. On the top is the weekly bars. These vertical bars represents kind of the places that reversals happened. And then on the bottom part is a weekly moving average of the New York Stock Exchange advancing declining issues. Okay, so it's an average of the up down for the 10 weeks of those advancing declining. It's not exactly the it's not the advanced decline, it's the average of them. And that's important because it kind of clears out the noise. And the way the market's built these days is you have government intervention, you have currency that is backed only by the name and the military of the currency. So there's no gold, there's nothing that no asset that you're getting really other than the asset itself. And so it's kind of a different market. And we can kind of see that this was really, put into play back here in 2009, where the US government would step in and back things up. But look, you can go back into, back into the 1950s, post World War II, where, even though, yeah, we had 10, 20, 30, 50, 70% sell-offs from time to time, it continued to, react and react higher and higher and higher and higher over and over and over. And each time it seems like, oh, this is the world ending. It's the most crazy thing in the world. And it's a blip. Literally, if we look back to the 9/11 and dot-com bubble, you look at it at the time, it looked like the worst thing in the world. The S&P 500 dropped over 50%, right? And then again, comes back and attempts it into the end of the decade and drops even further, something like a 60, 70% move down on the S&P 500. So a whole decade of nothing. It seemed like, the markets were just kind of that was the order of the day. And then from then on, they discovered that they could just, inject money, create magic money, put it in the market. They could do as much as they want, and people didn't care. Investors had to own it, or their buying power was destroyed. And so yeah, you definitely still have these sell-offs, and they seem like the worst thing in the world that has ever happened. Boom, that was a flu that came and took over the world. Um, and then next thing you know, it's right back off to the races, and paid the price a little bit, tried to clean up the credit rating a little bit, and you got tired of that, and tariffs, got tired of that. We get back to where we are today. So, the potential for something like that to happen is always there. But at this point in time, down 2.5% on the week or so. So while it was, especially if we look at it like in I don't know, let's go to a 60-minute chart, and you can see, yeah, that was dramatic. We went from 67, whatever, 67.60, so 200 points on the S&P 500. In 1 hour, we dropped 1.5%, and it just kept dumping. All I want to say here, what we're looking at it is this is a bit of a trailing indicator on the bottom. So if we do flip down, then this down here on the bottom will be useful for us to see when a bottom is in, an actual bottom. Like this sell-off we had in starting in February and culminating in April, that was an actual sell-off that printed a bottom. You can see that we got down below that shaded area, and that's where we started looking to get long. We got long right in here, 54, 5,500 area. We're still long on the SP 500, so we didn't try to. Last thing I'm going to do is go and try to bottom tick this or even top tick a trade. I'm looking for things to shift in my favor to where I have the odds behind me, or in my favor to do it. So right now, I'm not going to call this the beginning of a major sell-off or anything like that. Too early for me in the way I do my work to make a decision on that. As things show up and they start, giving suggestions that we should start lightening positions or things like that, then I will. But until then, I don't have anything in the SP 500 that's telling me to lighten my position anywhere. So we won't. Let's take a look. I'm going to introduce this one a little bit. I use it quite often. A lot of you might use market profile on, the left side of the profile this is the TPO, time price opportunity. So what this is this is the sideways representation of an asset trading. So you can see that S&P futures traded from 63, whatever it was here, the low here. It doesn't really show that, does it? Up there. Anyway, so 65.40 on the week up to 68. So almost 250 or so point range. And this was each one of these, each column. So it's kind of hard to see, but each column, the columns go sideways. Rows are up and down. This is a row, right? Columns go from top to bottom. And so each one of these represents a 30 period, 2-4 points within each 30-minute period. And so if you look at it on Friday, we go from 67.40 to 6,700, so a 40-point range within a 30-minute period. And then kind of the rest of the day is just spent. And then finally, there's this reversal all the way down to the bottom and a reversal into the end of the day. So, of note, this is a week. And then this on the right-hand side is volume. How much volume was traded? And the left side measures a week. The right side measures a month. Okay. And what's useful to see is we're just 1 week or so, well, 12 days in, but a little bit over a week into this month. And so the volume over here is mostly up here and spiked down. Now, for September, big range. The range pretty much is 6,800 down to 60. So it's a 500-point range into August, right? So when you see these like low traded areas like here, let's call it 65, 67, you can see it on the volume also. So volume spikes happen and then low volume happens. So oftentimes when you have low volume areas and low time areas, those areas like to get revisited to test. You can see that we had this low activity area right here where it kind of jumped through. The next week it came in and it filled that area. So low volume or low transaction, high transaction. In the month of September, we had a low transaction period from 65.80 down to, let's call it 65.50. So like a 30-point range in here. And we actually dropped down into that. So it's interesting to see that that's where price went to. One other point that might be interesting to watch is if we take a look at the September range to the high, we kind of dipped all the way down to the Fibonacci 61.8 level. You know, the thing about Fibonacci's, the thing about technicals and all that sort of stuff is they're useful in the fact that other people find them useful. I don't believe there's any magic involved in any of them, but the fact that maybe, a lot of other traders might believe that magic is involved in it, would indicate to me, it just means that there's going to be more people involved. Okay. People like Paul Tudor Jones, people like Stanley Druckenmiller. These people are used, they've said, and they talk about it often, about using moving averages, about, key levels, things like that. These are some of the biggest traders in the world managing, billions of dollars, and they talk about it. It's not that it's a magic line, it's that it's useful. Okay. It's useful for a point of reference. That's it. What I want to see is I want to see how reaction happens at those levels. Not so much that a level is touched, hit, anything like that, crossover happens or any of that. I just want to see what's the reaction there at that level. And that's where we're at right now after, last Friday's crazy, market behavior. I want to look and see what happens next. So here's S&P 500. Now, if you follow me in any period of time, you would know that I like to use this thing called the SQN indicator, and it measures the kind of the strength and the weakness of a trend. When you have a blue, when it prints blue, you get to a fragile area of a trend. Okay, when it's in green and yellow, that's a quiet trend. When it's in red, that's kind of volatile reverse trend. It's the kind of the opposite of going up. It's the down. And so when we find ourselves in these blue areas, we have to be prepared for high volatility. That's where that is where fragility finds its way into the market. If we look at all last week basically just kind of banged around from, I don't know, 67.50 to 68.20, maybe, like what is that? Like a 70-point range, not even a 1% range. And then you have a 3.5% down move on Friday. This right here is attempting to calm out that fragility. This right here, the fragility is generated from a fast moving market, a market that rises faster than people can dollar cost average. Think about this. If a market's going to rise, a very calm way for it to rise would be 401ks, IRAs, monthly allotments, dollar cost averaging the account. Okay. That would look something like this is what you want that to look like. Okay. That's a slow, steady, just putting a little bit of money to work here, low risk, just applying it, boom to boom to boom. When we see the blue part coming in, then we start to realize that, oh boy, it's not that dollar cost, let's get some access to the market on a slow, steady pace. It's momentum traders chasing the volatility in the market. Just think about that's what this represents. You don't have to like go out and find these participants and all the other things, but just realize that this is what, this right here is that standard, nice, easy drift higher. This is when, the troublemakers show up. And it doesn't always mean when you get a blue histogram here that a market is going to have a correction. And I say a correction is about a 5 to 10% pullback from the highs. But it opens it up. So if you have all of this stuff happening in here, the whole time it's in here, people have this wall of worry, right? Everybody still remembers the drama that happened in February to April during this slow drift higher. And so everybody's worried all the way to here. So it's very slow, steady um, allocation of capital into the markets. They're like, well, it's rising, so I'll put a little bit more in, put a little bit more in. Nobody's getting too risky here. As you get into this area over here, suddenly people are like, I have to own it no matter what, and I'm going to buy. If I was putting in $1,000 a month, I'm putting in $5,000 a month now. I'm chasing. I gotta hit my numbers by the end of the year, or whatever the reasons are. And so that becomes fragile because prices jump too quickly. They move too fast. People can't make a good decision, so they have to make a fast decision. And you know, we can just think about, like, without being able to, like, think through all of the things when you make a last minute, judgment or decision based on excitement and momentum and like anxiousness, you make bad decisions. And so that's typically what happens in this blue area. And so while what happened on Friday um isn't, could not, I would not, it can't be predicted by the fact that we are in this. The only thing that can be predicted in that sense is that price is fragile and something could potentially, we are open to the opportunity of a 5 to 20% pullback from the highs when this happens. Okay, when we're in here, it really is not available, so it's not something to worry about. But whenever you see the blue parts come in, that just represents a level that is, it's over like a certain level where price moves too fast. When that happens, you can get corrections fairly quickly. So this little, let me do, this little tool represents the speed of the rate of change and when things slow down. Okay, so you can see that we got down to, I like to use it mostly on on a buying level. Okay, so again, this is just a rate of change of this bottom thing. So every time we get down to these bottom levels, I'm a buyer. I'm not able to use it too well on the high end because things are manufactured to go higher. So it doesn't like stop automatically, but it does give me a little bit of a fragility. Okay. And so, we haven't really seen these high levels since last time we saw it was in the summer of 2020. We saw high level really kick in and then pull back. And yeah, we had a bit of a pullback, but it just kept going. So it's not really great on the, it's too hot. It's better on the, oh, this is the place to buy. So oftentimes when I see it, this little histogram thing or this little line get below that level, that's when I start seeing places that are like places I want to start buying. Okay. Not exactly, I'm not running out to buy it, but it's useful to, and in fact, let me just kind of see if I can change the color. I don't think I can at the moment. Okay. But once we're down in this area, this is a place I want to start looking to buy. So as we're looking at the market right now, as it is before the trading week begins, I'm looking for buying opportunities here. Okay. That's my analysis going into it. I'm looking at, we've reset some volatility. We've reset some things. Now we're in a place where the opportunity to buy is upon us, or things could seriously break. I like these type of places to be in, because if I'm wrong, I'm going to be really wrong. And if I'm right, great. I'm following my plan. And if I'm really wrong, if I'm open to the fact that I could be really wrong, I just need to, that just reinforces the use of stops, right? That's just proper risk management here. That's all it is. So, looking at that right now, I am constructive on that. If we want to go and take a look at Bitcoin, let's go here. I believe even more so, while the world freaked out on crypto and got really scared and really angry about crypto over the weekend, I really don't, and on Friday, to me, this is a nice fine place to be in. Um, a lot of people are talking about, the worst sell-off in altcoin history or whatever. I don't really care. Um, Altcoins are, they're always going to do historically stupid things. Crypto is not an altcoin. Crypto is its own or Bitcoin, I'm sorry, is its own asset class now. I don't believe it's the crypto, and I don't believe it's the gold. I think it's kind of its own thing. So Bitcoin here, I'm very content with owning. I'm not too worried about it. Ethereum also very similar sort of scenario. Yeah, it's kind of, a lot of people are kind of worried about it, and the fact that it's not Bitcoin. Yeah, I could be convinced not to own Ethereum while I own more Bitcoin. Great, for sure. Um, but it's looking fine to me. Um, we cleaned up a lot. Again, let's go back to actually, we could just see it on this chart. We don't really need to go to the to that one. But you see, it's still in the same range. Reacting up off it. I would be expecting another attempt down into here before we go higher. I'm, I'm constructively bullish. I don't see any reason. The trend is still intact. Nothing, that's higher highs, higher lows. Nothing has changed. There's nothing in my mind that has changed on this yet. And if we look at the same on ES, nothing has changed to me. This is all higher highs and higher lows for now. Okay. So even though that's a trend line break, I don't really care about trend line breaks so much on because there you go, there's your trend line break, right? Um, what I'm more interested in is that's a higher high or a higher low. That's a higher high. Okay. If we see something below here, then I'm starting to worry about a lower low. And if we see a rally that is below here, below that high, I should say below this high, and then a low, something like this, then that's to me, that is to me what would signal, like kind of a change. But right now, nothing has changed. It's just a big bar, and everybody's scared. That could very well change tomorrow. And so we start looking at, risk levels are going to be like right in here for me. Let's see if I can draw like a shadow area. For me, something like this area holding. So that's, probably down to 60 6,300 area to 6,400. Let's just call it. 6,300 to 6,400, not, or I'm sorry, 6,300, 6,400 holding to me is not a change. If we get below that, then I'm going to start looking at further lows. That's generally what I'm looking at here. Okay. So, let's go through our where's my is it where's my here it is. Okay, starting out. Okay. So we have a top in Russell, we have a top in SPOOS, Dow, and NASDAQ. So right now, I would be looking to buy um, on a curvy long, the pretty much all four of these indices. All of them to me would be buying opportunities that I am looking at this week. Okay, so let's just put my crazy face on all of these. All of these are open to be bought this week. Okay. I just like to have a nice emoji there that kind of reminds me what to do. Okay. Dow's looking better to me. I own the most of NASDAQ, and NASDAQ had probably the 4.5% down day. So it had the worst time. But I do believe that it is, you know, all the indices are in buy areas. Now, I'm not looking to just go and buy it because we're down here. I need to have it fulfill a certain thing. We need to have, towards the end of the week. If I miss it, you know, from here, if it just rips straight high and I can't add to a position, whatever, I'm long already. But what I'm expecting is, or what I'm looking for a trade is something like, that, and then I would buy right in that area here if it does that, like, and I'm fine with a new low. I don't need it to hold this low. I just need it to reverse, go back down, suck them in, and go. Now, that could take shape. That could take shape and kind of play its way down to, again, the 63, 6,400 area. If it does, I'm okay with it. So we could have a couple of weeks of this stuff before it finally, turns and goes higher. That would be good because that would wear out the overbought conditions, the fragile trend conditions, and I'm good for that. On rates, it looks like 10-year is the closest to, well, none of them are really actually anything good on rates. So we got nothing on rates. Let's go to metals. And last week, I put out the call that gold was had gotten into a fragile location, bull volatile, and we did get a decent little pullback. We lightened our position in the macro ops portfolio here. That should be I mean, we went from 3,300 to 4,000 in 2 months or so. I would be open to a short, though I'm not interested in shorting gold, especially in this sort of regime. But if you were feeling aggressive, a sell stop below the low of Friday, 33 or 39.61, down to maybe 3,700 or something like that. That would be interesting to me. I'm not trading it. Silver, similar scenario. I would look for, well, it would have gotten filled somewhere in here. So again, silver, I would be looking to take some risk off. Copper came in and just did what copper does, just broke hearts. Trend. Up, 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 boom, slammed. No interest in messing with copper. Platinum. Now, these are going to be most affected by the tariff situation, so I'm not super interested in participating in that. Gold is probably the only place that I would be interested in participating. But yeah, copper, platinum, silver, those are going to be industrial metals, and those are going to be hardest hit. Gold is going to act like U.S. interest rates, or it's a safe haven in that scenario. It's not really an industrial metal, so you find it being having a financial use more than a industrial metal has a financial use. Financial use meaning safety, like, oh, let's sell our positions, go to gold, go to cash, or whatever. Crude, no interest in being in crude, though. Down in here is where that's not true. This week I am actually considering the metals. I'm sorry, energy, and I do not include I do not include Natty. Natty is a no-go for me. No interest in trading that market. Brent, RBOB, light crude. I do have a potential, um, a lot going on this week, actually. I might be convinced to get short gold. Not interested in these metals. I might be able to get long crude, RBOB, or Brent towards the end of the week. I might be looking at doing a crack spread. Who knows? Let's go to currencies. All right, finally. Boy, what a week. I got euros. I got cable. I got Swissy. I got Loonie. I got the yen. I got Aussie. I got Kiwi. Peso, I'm still long. So this week, I got a lot to be looking at to be buying in the currency space. When those set up, we're in neutral market regimes across the board. New Zealand's probably going to keep me out of it. Yen. So we're probably looking at something across the top deck here. Loonie, Swissy, Cable, Euro. I don't think, and I am currently long peso. Don't really have much going on selling peso. Let's get into the ags. I did get long soybeans. So beans are the only thing I'm actually long in the ag sector. We got long over here and we pulled back. We're still safe. Looking for a move up into the 10, the 1090 area. We'll see if this plays out. We're taking a bit of a drawdown here, about a half an hour drawdown, no big deal. Outside of that, Bitcoin, Ethereum, cattle, I still don't have any reason to be messing with cattle. As fun as it looks to be in, no reason. Sugar, cocoa trending lower, and no reason to be doing anything with cocoa. I was looking at coffee. I've not seen coffee put anything in, any reason to get in. Cotton, nothing. Lumber, nothing. And finally, we get into um, our equity positions. We got long Apple. We got long Tesla. We're still in good money on Tesla. We're still in the money on Apple. And we got long Cloudflare, which really hasn't done much of anything up or down, just mostly sideways. So what I would like to see here, we did send 430 up to 480, pulled back. If this gets taken out in here, this sort of trend line area right here, if that gets taken out, I think we come back into it. Same sort of thing. We got long Apple. It's gone up, come back. I would look for kind of a retest down in this area here, and then another move higher. Same sort of thing over here. It breaks out, it comes, and then it goes. So those are kind of the setups. I have no reason to be lightening any positions on that. Across the board, uh, nothing really interesting. I will go back to the fact that let's go here and just have a look. If anything happens in the 6,300, 6,400 area, we break it. That will change everything for me, and we'll just kind of reset exposure. But here, I'm a buyer. I'm looking to buy. And it'll probably be, if I do buy anything, it will be later in the week when I've been convinced that um that we are within it. So again, I'm looking for something of this nature. So it's come down here, we'll go up, we'll go down, and then, again, I'm looking to buy a breakout of that sort of thing. It could also come down here. And then maybe we have to get long next week or the next couple of weeks. It might take some time. Nonetheless, we are in a nice, comfortable spot. I'm not worried about anything here. Um, the final point here is while I'm not worried, things can change quickly. If it changes, I'll change my, if things change, I have to change my opinion, my position, my take on this. But until then, I have no reason to change that. So I'm sticking with my plan. I am going to, follow through as the trade set up, add to my positions. If we get down into here and we start breaking that, that'll probably be like a mass liquidation of everything, large profit taking sort of scenario. I don't know, de-risking it all. But right now, this is just an opportunity to, add more to our position. I don't call this, this doesn't make it anything special that I'm buying here. Like I'm not a, it's not a big, adrenaline filled show off. I'm a big swinging delta here. It's just that this is just the system. It's no special bets on the market. There's no special thing that I feel like I'm out thinking somebody here at all. It's just this is the trade. So that being said, the only other thing I want to take a look at is um, right now. Here's a We did spend our time looking at Bitcoin. One thing I want to take a look at is Binance real quick. So Binance is almost all the way back to its all-time highs right now on Sunday afternoon. Um, After going from 13 down, I mean, look how far this thing went. After a 34% sell-off on last week, we are back to nearly all-time highs. Okay. Um, I don't know what that means. Bitcoin's not there. BTC is closer to, the bottom end of that range, 13% sell off. And, now it's, fixed, repaired to, 9%. So, but if I'm just looking at Bitcoin, it's just sideways here. This is why I say, Bitcoin is not crypto so much. Binance, I would say, is very much leading crypto right now. So if you want to see like the rest of the crypto, the alt markets, and everything else that's going on, focus on Binance. Don't focus on Bitcoin. And right now, they're coming back strong. This is the leveraged market. For those of you who are doing our crypto system, we don't use leverage. We're not messing with Binance. We're safe. We took a 10% or so haircut over the last week in our system, but we're not in any of the things that are at risk, and we're certainly not using leverage. So we're doing just fine here. We're up, depending on when you joined us. I'm up a couple 100% in the last year and a half or so. Um, it's it's just it's changing. Everything's changing. Okay, guys, I'm rambling. Have a wonderful trading week. I love you all.